Hello and welcome to Profiles in Risk. This is your host, Tony Cañas, pitching the second in a double hitter on this Friday, and leaving for 3 weeks in Costa Rica tomorrow morning. So I am one happy camper, and this is my last meeting before heading out. I head out in the morning, so I'm in no hurry. Today I have with me Rock Schindler, founder and CEO at SDRefinery AI. Rock, thank you for joining me today. How's it going?
It's going great, Tony. Thank you for the opportunity to connect with you.
Awesome. And I've got to ask, uh, is Rock your legal name? Were you born with the name Rock?
It is. It is my birth certificate name, and there is a story behind it. Mom and Dad had a child born before me that only lived a couple of hours. And when they became pregnant again, they asked their priest to whom they should pray. And the priest told them there was a patron saint of unborn children called Saint Rock. So they prayed to Saint Rock, and then when I lived more than a couple hours, they decided to name me after Saint Rock.
That is a sad uh but really really interesting story. And it left you with with a really fantastic name.
Thank you so much.
Absolutely. But by the way, my quick Google research says that the proper spelling in the original language is ROCH, but you got really lucky that they went for ROCK.
I
Uh,
completely agree with you. That's right, because I wouldn't have wanted the nickname Roach in the 70s and
no, no,
80s.
1,000%, 1,000%. Okay, and it looks like you are in the Minneapolis area. We are recording on July 19th when my own backyard here in Atlanta, Georgia, or which is the Beltline, because we live in an apartment, is about 95 degrees for about 95% of the day. So I'm guessing Minneapolis this time of the year is absolutely gorgeous.
It is 100%. And we're coming out of a kind of a wet streak, but
Okay.
if you look at the 10-day now, it really epitomizes summers in Minnesota, which is mid 80s a day and low 60s at night. And it is absolutely fantastic.
All right. And I see that you're a fellow CPCU, fellow ARE, so that's fantastic. CPCU from '96, so I think you went to Hawaii. Uh,
No,
if
it was actually Dallas. I went to
Oh,
Dallas.
okay,
Yeah,
you missed it
yeah.
by like a year then. Uh, all right, we always give the guest the chance to give the elevator pitch. What is SDRefinery AI?
So SDRefinery, which is short for Sentence Data Refinery, and that's a discussion or story in and of itself. But SDRefinery is solving the growing problem that we have in insurance, and that it takes too long for P&C claim leaders to identify process bottlenecks and root causes of poor performance. And we're solving that problem by reading every adjuster note documentation and measuring key events, actions, and activities. We're creating operational metrics that radically increase the speed and efficiency of making the changes needed to improve claim outcomes and lower claim costs. So that really is what we're about. So we're creating time savings for managers by not having to read individual files, and we're creating radically more objective evidence to support what's actually happening with a team of claim adjusters. And the results that we produced are manifest in an interactive operational metrics dashboard, which we're super excited about in terms of its ability, again, to help claim leaders see things that they really never before have been able to see. And that's what we're doing.
All right, all right. So I took notes furiously, and I don't think I captured everything, but we'll go step by step. And I love Bringing it back to my own experience, and I was a claims adjuster for 2 years. I spent 1 year at Farm Bureau of Iowa in the Express Claims call center, and I loved it. And then that was basically like take the call, enter it in the system, and work the claim if it was clear liability, not a total loss, and no injury. So I got to be the hero, or I got to send it to the next level. It was amazing. Lowly paid as all get out, 32,000 a year back in 2009. In Des Moines, Iowa, I could almost pay my student loans on that, but wonderful work, and I learned a lot about insurance. And then I went to Nationwide, and at Nationwide, I was a senior medical claims rep, and I hated it. And I went to underwriting. My best friend from those years, and to this day, Andrew, ended up going to Cincinnati Insurance as a field adjuster, and he is basically in line to be head of claims there someday. He's had just an amazing claims career. And then I worked with claims organizations when it comes to recruiting. And I talk to a lot of claims adjusters when it comes to career advice through chatwithtony.com. Number one call I get is claims adjusters asking, how do I get out of claims? So I have tangential experience here, but I've never been a claims manager. Okay. So claims is where my first manager at Farm Bureau, Kyle Kropp, said something very wise to the team. Claims is the product that the client is buying. Okay, and I haven't found anybody to disagree with that. Unfortunately, what I've seen is that claims is treated as an expense by most carriers, and that results in a lot of vices to the way we do claims. And above and beyond anything else, claims is messy and complicated, right? Like this is no longer the hypothetical, this is no longer the exciting world of sales, nor the hypothetical world of underwriting, where we're wondering about the things that could happen. In claims, something happened, and now we're trying to adjust that fairly and within the contract and within the regulation, and it can get ugly quickly. So, and adjusters, importantly, adjusters are buried,
Right.
perennially buried in an unmanageable amount of pending files. So what did the management systems in the claim space look like before SDRefinery AI?
So to answer that question, Tony, if I could, maybe let's go back to where I started. Okay, coming out of college, and I don't know if it's on my LinkedIn, you didn't mention it, maybe I didn't put it on there, but I was a CPA. I started with a public accounting firm, and I spent 9 years working as an auditor with KPMG, Pete Marwick. And in doing that, I saw a lot of companies, and I saw a lot of companies struggle with their systems. And interestingly, in 1994, which was 2 years after Hurricane Andrew blew through Florida, Walter Schutze was the head of the SEC, and the public companies wrote about half the market. I think Andrew was a $12 billion loss, and Walter Schutze went to look for $6 billion of disclosed losses and could only find a couple of billion. He went on a tangent, where the hell are all the losses? And what it exposed is the fact that reinsurance was a lot more about banking than it was about risk transfer. And it really ushered in a whole new era of bringing quantitative thinking into reinsurance buying. So I
Yeah,
got recruited to work. Yeah.
that's when what yeah, Andrew. So I'm not old enough, but I'm a nerd. So Andrew is like the day after Andrew, basically, like the cat modeling industry became a thing, right?
That's
Like
right.
it really it didn't exist prior, right? So okay, so how did you get involved with that piece?
Okay, well, just another data point there. So the company that developed the cat model was EW Blanche. They're the broker. They were the company that recruited me to help them And my boss, Steve Korducky, a brilliant guy, he and I were really, again, at the forefront of helping brokers negotiate with their companies and figuring out how to come up with reinsurance contracts that had the most financial benefit, but also had the right amount of risk transfer. And as you said, E.W. Blanche in the years leading up to Andrew was having very little success. Hurricane Andrew happens, then all of a sudden the phone is ringing off the hook, and it really launched the company as E.W. Blanche. But that's a whole story in and of itself.
Mm-hmm.
Suffice to say that between KPMG, Pete Marwick, and E.W. Blanche, I saw hundreds of companies, and every company had a mess for IT systems, and they were all working on the next system that they thought was going to solve all their problems. And guess what? It didn't solve all their problems. In fact, they got 75% complete with the implementation, and something better came out. And so they abandoned that one and went on to the next one, thinking the next one was going to solve all their problems. But bottom line is that insurance company systems were an absolute mess. They always have been, and I think they always will be for a lot of reasons that are kind of float around a core concept. And the core concept is this: risk and insurance by its nature is very abstract. It's nebulous. And so you can give two underwriters the exact same data, or two actuaries or two claim adjusters. You can give them the same data on an account or on a claim, and they'll come up with very different strategies in terms of what should or should not be done on that particular
Mm-hmm.
topic of interest. And so because of that inherent subjectivity, it's really hard to measure someone's judgment. And so you as a claim adjuster, me as an underwriter, it's hard to measure our judgment. Of course,
Absolutely.
over a long period of time, our judgment is manifest in the results that we produce, but in that period of time, a lot of bad things can happen. And so
Mm-hmm.
the ability to better identify who's making good decisions is really kind of the central theme to how we got to where we are today. Because in 2006, and I have to bring up my brother Reggie. I have to bring up his name because he was an important character in this whole thing as well, in two aspects. Okay, first, his brother-in-law was the CEO of a new company that had been formed by a group of linguists out in the University of Utah. They had patented their technology to work with text data, that which I started calling sentence data for reasons that I can talk about. But at the end of the day, we realized that technology could be really valuable both in insurance and in healthcare, because healthcare, by the way, has the exact same persona as insurance in terms of having professionals that have to apply a lot of judgment on a lot of decisions. And that judgment is documented in what I call original content documentation. And that original content documentation is where all the knowledge resides, because insurance does not fit well into structured data fields, because insurance and risk is always changing. If you knew what was going to happen tomorrow, you could design the perfect system and then magically get everybody to use the system the right way, but those two things won't happen. And so you're left with narrative documentation as the best source of what's actually happening here and now. And so the technology that we have, that we've been developing now for over almost 20 years, and what we're doing right now with the SDRefinery is the third company that we've had in advanced stages. So each one we've gotten better, we've changed things, we've come up with different ways to do things. But we've been doing this since 2006. And then interestingly, can I go on one more point, or do you want?
Absolutely.
Okay.
Yeah.
So at the same time that we started this business in 2006, my brother and I started another company, and that company was a specialty product that we wrote in an MGU. And we started with, we formed a captive insurance company in the Cayman to underwrite the product, because, of course, like with any new product, we didn't have enough data to go to to an insurance carrier. So we formed our own captive, and we were writing $250,000 limits. And in the first 60 days, we had 2 limit losses, and we were in deep trouble. But I mean, honestly, Tony, it was the best thing that ever happened because Reggie had an affinity relationship with the core group of surgeons that really believed in what they were doing and really needed the product that we were offering them. And so for them, it wasn't a question of if, but rather a question of how we were going to make the program survive and succeed. And that's exactly what we did. We made the adjustments that we needed, and we did that by living in the claim data, by figuring out, okay, what's happening with the claims? How do we adjust our terms and conditions in order to account for what we're seeing in the claims, right? And that's the way insurance should exist. But guess what? It doesn't work very well because of all these problems that we have with systems. As an industry, we suck at getting the information that we need from the claim system and fed over to the underwriters. And so, back to your core question of how did we get to what we're doing, it's around this whole notion of recognizing that there's all this narrative documentation, original content documentation of facts, circumstances, and decisions that represent how people are thinking. And by creating operational measures from that written documentation, we can much more faster, better, create the necessary changes, identify process bottlenecks, identify where we need to give people more training, where someone's missing, they're missing how to determine the liability of a claim, or they're missing how to go get an independent medical exam after a bodily injury claimant reaches maximum medical improvement. There's all these nuances that right now are not very well identified in terms of where people are hung up and where they lack training. So let me just stop there and see how much of that you followed and how much
Everything you've said makes perfect sense to me. Absolutely, like this is insurance nerd candy of a conversation, like super interesting. Yes, claim files get really messy, really messy. uh, and it's data that's very hard to make decisions from. And one of the things I loved, what was, so very early in the conversation, I have a note in capital letters, not having to read individual files. That part scared me. That part, like if you were a tech bro with no insurance understanding, that part would really scare me. But the idea of radically more objective evidence to support claim adjuster performance and to manage claim adjuster performance, that makes a ton of sense to me. And one part that really spoke to me is this idea of being able to identify who is making good claims decisions, because that it is so hard.
right?
And again, I've never found myself in the shoes of a claims manager, but I can only imagine, and I have worked with many of them in different ways. I've just never been one, but I can only imagine, like, how do we measure a workforce that is buried at all times in something super technical, super squishy, right?
Right.
Like maybe in property it's easier, but in injury, there's super squishy claims, right? How do we measure decisions in that space? Uh, we can get one approach I've seen. Well, I've actually seen two radically different approaches. Okay, and I won't name the companies, but let's just say that my best friend worked at both, at one of them with me and at one of them without me. At one of them, the approach was incredibly detail oriented, nitpicky. We measure 92 different factors in each claim, and then badger the adjuster over the head with getting anything wrong in those 92 different factors. And God knows how objective those 92 factors were to begin with, but nobody can manage to that many different factors.
Right.
That led to extreme adjuster unhappiness and extreme adjuster turnover. At the other company that I did not work at, that he worked at, the approach was extreme trust in the adjuster. And when he was interviewing there, they literally told him, "We are very careful who we hire, and then when we hire you, we hand you a checkbook and go forth and handle claims." Basically, like very little QA on claims. Uh, Neither approach works great, right? One approach produces adjuster turnover and potential, and I don't think really improves claim quality. The other approach might keep the adjuster very happy, but you're probably paying out you're probably paying out more than you owe, which is not good in the long term for your loss ratio, which we all have trouble with nowadays, right? So I really love what the feel that I'm getting for what you guys are doing. So what does it look like? For the claim VP, for the claims manager, for the head of claims at companies using your technology, what is their world like?
Yeah, well, they're short on time is probably the number one factor. Their world's changed after COVID, and uh, we went from in-office environment to a remote environment. And there are a lot of companies that used to have, let's say, a captive workforce that suddenly changed, and all of a sudden, those people could work from home. They could entertain an offer from one of the, let's say, a major carrier to work 500 miles away, 100% remote, and so suddenly it became a very different world. And so I think that has really changed a lot of things. I think there's a lot more turnover. I think there's also a major change in the way that people are coming out of college and starting. They really have an aversion to phone calls. They would
Yes.
much rather text. And
so
so
so let me that's my topic. I don't think you knew this, or at least we hadn't chatted about it. I wrote the book on how to engage millennials within insurance, and I do a lot of
I
speaking on
remember
that
that.
topic.
Yes, I do. Yes.
And I'm currently writing the book on how to engage Gen Z within insurance. And I'm not a primary researcher, but I grab research from demographers and psychologists and sociologists and whatever else, and bring it to insurance and apply it to insurance. And also I run chatwithtony.com, which is free career advice for insurance professionals. And I can tell you that I'm 41. I'm an elder millennial. 95% of people under 35 hate talking on the phone, especially if it's not scheduled. Okay, so one thing is we schedule a recorded interview and then we get on the phone to do the recorded interview. But a whole different thing is I'm calling you or you're calling me. So those roles are hard to fill. And those roles are the backbone of our traditional customer service slash claims. They're hard to fill and they're hard to keep people in them, and that's only going to get harder
Yes.
because of two generations that are and by the way, why do we hate? And I do count myself in this. I don't answer calls unless they're scheduled, and most of the calls I do are on Zoom because I like to have both. I like to have body language if at all possible,
Yeah.
right? But why do the younger generations prefer a text or an email? Because it's an asynchronous form of communication, and it gives them the ability to think before they reply. They don't have to think on their feet the way that you have to in a phone call. And they might not they might not consciously think of that, but that's what the research is telling us why this. But yes, you're absolutely correct that okay. So I kind of interrupted you there. Okay, so how does your system help us with that issue?
So Let me just ask you, Tony,
Mhm.
before I go into this. So, um, as a claim adjuster, and I'm trying to remember your degree coming out of college, but let me just ask, how much of your
Business.
life have you, or how many hours a week, a month, a year do you spend with a Excel spreadsheet?
A lot. Not anymore because I went in a different direction. But those that went into management spend a lot of time. So I
Yeah.
learned a lot of Excel in college and in my MBA. And my girlfriend, who went the management route, lives on Excel files.
Yeah. So the vision that I've had for some time is that we're trying to do the same thing for sentence data that a spreadsheet does for numerical data. Because if you think about the spreadsheet, it's a platform into which a user can import a lot of data, numerical data,
Mm-hmm.
and depending on the business question that they're trying to answer, they build pivot tables, formulas, charts, graphs in order to support whatever they're trying to do. And maybe it's just a table, maybe it's a simple formula. But the point is that the spreadsheet is a platform. We're trying to be that same platform, meaning that if we go to a head of claims, we're going to them with ability to measure whatever activity is most important to them. We've got well over 100 different things that we measure, and we'll happily talk to them about what we're ready to measure for them. But we also encourage them to say that, you know what, whatever you're trying to solve, if you have a new investigations vendor, if you have a new body shop estimate vendor, if you have some new technology that you're trying to bring to your adjusters and you've trained them on it, you want to figure out whether or not they're using it the correct way, let's measure it. Because how do you know if they're using it? Right
Brilliant.
now, you're going to go read some files or you're going to wait some period of months. But guess what? We don't need to do that anymore because we can go in, we can read all their documentation, we can figure out who's using it well and who's not using it well. And then we can figure out where we can direct our training effort. And to circle back to a comment that you made earlier, um, I recognize that we're not going to, nor should we, replace the need for people to read claim files.
Okay.
I think we will radically change how, when, and where people read claim files. They're going to go read claim files based on the fact that they've got a red line on a dashboard that says they've got a problem with a certain number of adjuster in a certain area, but they're going to have a lot more intel, and their reading of that file is going to be much more targeted and effective because of the broader evidence that they've been able to gain from the metrics that we've provided them.
Perfect. I love the vision of being the Excel for sentence data, because uh, Excel is so freaking powerful.
Yeah,
You
it
can,
is.
right, like if you don't believe that, go talk to an actuary, have them show you a couple of their Excel files.
Right.
Not everybody thinks they know how to use Excel. Nobody really knows how to use Excel. If you use 5% of what Excel can do, you can do amazing things. So if you get if this thing gets to a point or is at the point where it can do 20% of what Excel can do, but with unstructured sentences, that is life changing. And not just for claims. Like I can imagine how this would be life changing for any area of insurance, because insurance is like, ultimately it's a contract, right?
Yeah,
And ultimately uh it's so squishy
yeah,
that everything gets documented verbally, right?
yeah,
Everything gets documented, like underwrite as a middle market underwriter. That's how I documented my files,
yeah,
right? I'm not clicking yes or no, or things from 1 to 10. I am writing
yeah,
why,
yeah,
for out of different aspects, why I gave this risk a better price, or a higher price, or why I declined it, or why
yeah,
we're taking credits away for next year, or whatever, non-renewing or whatever. All of that is documented with uh, verbiage, not with structured
Right.
data.
Well, I'm chomping at the bridle here a little bit to jump in because it's so interesting, Tony, that one of the blessings I've had in the industry is I've seen it from so many different perspectives, from the financial infrastructure to the reinsurance mechanism, from risk origination to where it ultimately ends up with the reinsurers. And for way too long, we've done way too many things. And that actually hurt us quite a bit. And it's only been, in this in sentence data refinery, SD refinery, where we've really kind of said, no, let's not try to do everything. Let's just really make our mark in claims. And even within claims, there's so many different places where we can use it, but we're also trying to be a blue ocean strategy as opposed to a red ocean strategy by focusing on claims leadership rather than trying to put another tool in the hands of the claim adjusters where, I mean, that's really a red ocean strategy. We think there's a real opportunity to give leadership information and access to things that they've always wanted to see but never could before see. And a really critical part of what we're doing, Tony, is the ability to go from a highest level metric down to the lowest level of granularity. So somebody working with our interactive dashboard, they can go from an overall team score to a breakdown of how the individual adjusters scored on an average, their average for whatever number of claims they handled, and we can go down to the individual claims, and we can go down to the individual note to show us, or series of notes that allowed us to identify a milestone event from which we then went forth and made the measurements. But that really, I think, is a critical aspect to what we're doing and giving people confidence that they can understand what they're doing. And I think that's kind of unique to risk and insurance. But you'll appreciate this story because there's a name that was fairly highly regarded in the industry, Terry Van Gilder. And I had the opportunity to work with him. He was at Chubb and then Reliance. He got recruited into Reliance to try to save the ship as it was going down. But he always told me, when I was working with this technology, said, Rock, any CEO worth their salt is going to pay you many multiples if you can help the underwriting process. So don't be screwing around with claims. And so I spent way too much time working with underwriting and loss control, both areas rich with unstructured documentation or that narrative documentation. But again, at the end of the day, we're now more heavily focused in claims. But I know that we have a pathway towards solving the holy grail of being able to more efficiently pull information from claims and feed it into underwriting. I know that's definitely on our map. We've got to be patient before we can get there because we've got to get some more economics going from our current product offering. But I know that's really one of the things that we can do a great job with in helping the industry become more efficient.
That is fantastic. The underwriting and claims, having sat on both sides, often don't communicate greatly, very well between the two sides. So the more that we can improve that,
Yeah.
the more that uh, claims can quickly figure out what the intent was when the policy was written, and the more that underwriting can quickly understand past and still open claims when renewing a policy, that is really, really, really important on
Yeah, I
both
mean,
sides of the game.
you think about the whole premise, it's just absolutely bass backwards, I think, as they say, because you think about right now it's set up so that claims people are supposed to forward information to underwriting if they see things that meet a certain criteria. The reality is that if I'm an underwriter, I see something new coming up on an account. And that's really, of course, as you know, insurance is all about figuring out what's new, what's happening. Wait a minute, I
Uh-huh.
haven't seen this before. Where's this coming from? Okay, well, guess what? I can now go query my entire data set of claim adjuster documentation to figure out whether anybody on any account has seen this new thing that's coming through my underwriting account.
That is freaking amazing.
You should not
Like
be waiting.
truly.
You should not be waiting for a claim adjuster to say, hey, this is happening. You should be able to say, wait a minute. Okay, as an underwriter, I want to go figure out how much this is happening in our current population of claims.
That is, yes. that is that would be amazing to have that visibility. 1,000% agreed. Uh, looking at the website, improve adjuster performance 30% by using AI. Identifies objective facts, enables quick action, drives improved results. Uh, I You talked a little bit about how you have 100 things you can do out of the box, but how it can be configured for our specific needs. Uh, I love that. I wonder if you have any stories you can share, and feel free to share the company name of the client if you want to, and if you're able to. Feel free not to if you're not allowed to. But are Do you have any great stories of something specific that a client asked to be configured and what the result
Yeah.
was from that
Yeah.
ask?
So I'll give you two examples. The first one I'll keep sanitized, but on that one, just to bridge on where we were a moment ago, we went into the claim files and pulled out documentation from the adjusters. And by the way, for this company, they have a perfect mindset, which is that any claim incident is an opportunity to gather knowledge from an insured. And so their adjusters gather as much information as they can on the risk that's being evaluated for the purpose of paying the claim. And this was property. And what we looked at a couple different things, but the most relevant was what's the condition of the roof? And so we compared the documentation from a claim adjuster to the documentation submitted in the underwriting process by the agent and by the insured, and we identified when there were gross mismatches. And this company was able to go back and re-underwrite some of the accounts, take some action against some agents, and they were able to deal with an obvious problem. And that's a really simple example. Another example that we like to talk about, and that's our relationship with Ohio Mutual, and that's just been really great. I can't say enough good things about the people at Ohio Mutual. They have the right mindset in terms of wanting to innovate. They helped teach me that our strategy needed to be progress over perfection. They made it clear that they didn't expect me to be perfect, but as long as we kept making progress towards the ultimate goal, that was going to help them. And of course, it helped both of us. But one of the things, so I'll talk about two of the metrics that we do for them. One of them is time to quality contact. And I'm not just saying contact, because contact can mean a lot of different things. I'm talking time to quality contact for both the insured and the claimant. And what we are doing for them right now is every month we get all their claim notes. We refine it into milestones, measurements, and metrics. And one of those is the time to quality contact. And that's, as I said, I think broken out between the insured and the claimant. It's broken down by rep. And in doing that, what we're providing is a lot better feedback for them where they have process bottlenecks. And they save the time of doing file audits. They no longer need to audit contact times because they've got this consistent measurement. And by the way, when we start with them, we audit our own results with them. We collectively every month sat down and would select a sample. Are we interpreting this the way you want it interpreted? And there were, of course, plenty of things that we needed to adjust, but therein lied mantra of progress over perfection. And we kept making the adjustments, we kept finding things. And I really can't say enough great things about the way that has helped us grow and it's helped them grow as a company because they have a lot better feedback on where contact is working and where it's not working. But then the other metric is determining liability. Okay, that's something critical for any adjuster to do,
Mm-hmm.
and the ability to look at the population and then have objective knowledge of where somebody might be struggling or where somebody's excelling and setting up cross training opportunities. So
Yeah,
I've
yeah.
got another thought with that, but I want
Mhm.
to take a pause just to make
Oh,
sure you're tracking
I
with
was
me.
just to say, if we don't get the liability decision correct, nothing else we do in the claim is correct. Ohio Mutual, I do have to back you up on that. Fantastic company, uh, regional out of Banworth, Ohio. This is I have a significant background with Ohio, and I've spoken at Ohio Mutual in Banworth. It's been several years, but for a small company in the butt crack of Ohio, it is impressive. And if I'm not mistaken, they were one of the companies featured in Brian Falchuk's
They were, yes,
Future of Insurance.
yeah.
Yeah, Future of Insurance Volume One. So yeah, great company, great call out there, and great to hear the work that you've done with them. So yeah, keep going.
So
It's
one of the
fantastic.
really interesting dynamics that I think for us is really an important mountain to scale. Okay, and this goes back to I'll say one of my investors and someone I actually used to work with. She was a partner at KPMG, Pete Marwick. I could say a lot of great things about her, but in the interest of time, I'll just call her out and acknowledge how much I appreciate her. But one of the things that she said to me is that, Rock, you're going to encounter a lot of pushback on people being measured because people don't want to be measured. And that's a real dynamic for us as we talk with claim leaders, figuring out how we strike that balance between giving objective evidence about the decision making without creating what would you want to say, an adverse
Adversarial.
mindset, right?
Yep.
Because what we don't want to do is create an environment like the company that you described earlier, where you're measuring 92 different things including how long it takes to go to the bathroom or drink a glass of water. I mean, that's just simply not helpful. And so
Mm-hmm.
we're trying to figure out the right balance and the right dynamic to give claim leadership information that's useful and helpful in terms of driving productivity without at the same time creating an adversarial relationship
That
between leadership and the actual staff.
that makes me so happy. You have no idea. Because very often, and this is not an insurance problem, this is a corporate problem. Very often we measure the wrong things. And you get what you measure. Accounting 101 in college, Dr. Duffy, I will never forget. You get what you measure. And at the time, I thought no, people do what you pay them to do is what she said, which eventually I came to understand as people do what you measure. And at the time, I thought it was the dumbest comment ever because of course people do what you pay them to do, and it took me decades of experience and being a nerd and chatting with people and reading about business uh, to understand that people don't do what you tell them to do; they do whatever you're measuring. And if you measure the wrong things, you get the wrong things, right?
Right.
And it happens so often. And as we get better technology, we should get better measurements, but it doesn't always happen. It doesn't automatically happen. You have to be very conscious about it, and you have to take the you have to at the very least grab a few great claims adjusters at your company and understand why they are successful and measure to those things. You have to kind of take the user into account in the designing of those measures. um how do I put it? Okay. People want to do a good job.
Right. That's right. They
Your
do.
employees want to do a good job. When
Yeah.
they showed up after college on their first day at work, they 1,000% wanted to do a good job. Now, along the way, they might have had bad experiences at your company or other
Right.
companies, and some of them uh, have become cynical along the way. This happens in claims a lot, by the way. But they want to do a good job, both for their employer, they probably care about the company, and they want to do a good job for the client also. Okay. The problem is that if what you're measuring, rewarding, firing, promoting on are things that make it harder for them to do a good job, things break down. So yeah, I think that basically, like, if it were up to me, we would have an organizational psychologist involved in every decision on how we're going to measure our employees, because
Right.
it's very easy to, for example, call centers. uh in my opinion, every call center in insurance should be ran in the style of Zappos before getting acquired by Amazon. uh where, well, that plus add uh compliance, right? We can't just tell the client, yes, we do have to stay within the rules of what insurance is, over what our contract is, and of what regulators ask us to. But if the many call centers in our industry get measured largely, and you kind of pointed to it, time on call, right? If what you're measuring is how much time the adjuster spends away from the desk and how quickly they can get through a call, that is not resulting in good customer
Right.
service. It is also not resulting in happy employees. So you're shooting yourself in both feet, basically.
Right.
And another mistake that I see often, and I lived through this one in my past as a claims adjuster. I went to the company very happy because on the way in they told me 50% of your performance is customer service. And I'm like, fantastic, I'm great with the customer. Right? It turns out that the way they measured this was very, very broken. I would touch 100 claims in a month, maybe more. Out of those, 8 weeks later, 2 of those would get calls from a third party. And by the way, there's 5 or 6 or 7 adjusters in each claim.
Right.
So 2 months after the claim closed, some random third party who doesn't work for the company is calling the claimant and saying, "How did Tony do in your claim?" And I was expecting to keep a 9 out of 10, and the number one, the client doesn't know that 9 out of 10 is a passing grade, right? That's not the way their brain works. And number two, since they were calling so few of them, it just wasn't representative. Basically, you would get one bad score, and it would thank you for like the year, right? And I was only touching the injury part of the claim, and let's say that the result comes back, and I got a 1 out of 10 from one of the claimants because the rental car was screwed up. I never touched the rental car. That's not my job, right?
Right.
Unless my manager can convince their manager
Right.
to accept that bad score, which they won't, it counts for me. And because I have to keep a 9, if you get
Yeah.
one
Yeah.
or two in the year, you're done for the year. So what do? You leave the department before you get to your review, right? So anyway, there's many ways to measure things
Right.
in a way that creates bad customer service, bad claims handling, bad employee
Right.
retention. So that this is so important, so very important. And we're this has been such a good conversation that we're starting to run out of time.
We are.
And I
So,
do have another call here in 9 minutes. Uh, the fact that you can configure it to our specific needs, the fact that you have I want to quote a few. So I'm looking at the website still. A few of the 100 metrics that are built in out of the box. Time to quality contact. This is huge,
Yep.
and this very often gets measured wrong. I've seen it happen. Time to investigation, days to first damage payment, time to liability determination, um, late contact protocol. Anything late is really bad because we also not only do we have bad customer service, we have bad faith in some states,
Yep.
right?
Yep.
Comparative negligence, plan of actions, case management. Basically, like just seeing a few of the things that you can measure out of the box, those would be really, really, really helpful. And I do also love how on the website you have quotes from some clients and an interview with Nate Brown, claims manager at Ohio Mutual. What uh so for the listeners, we're recording this in July. It'll probably go live late August. So it'll go live just before fall conference season. Uh, what conferences do you already know that you guys are going to be at for the rest of the year, where any listener might be able to like actually see it and meet you guys in person?
Yeah, that's like a direct hit to the solar plexus. Just because we've tended to not really be that active at conferences.
Okay.
And I know that you are a big conference guy, so maybe I need to separately figure out how to engage you and send you. We just haven't gotten a good return on the time that we spend at conferences. You know, you
this,
got a limited budget, and
this is a conversation we definitely need to have offline. It is a very tricky thing.
yeah.
Absolutely. All right.
But clearly, the industry does a lot of work at conferences. We don't. We should. I need to give a shout out to Emma Roloff because you asked me to get or suggested, you recommended me get in touch with her, and she and I are spot on in terms of the way we see the importance of people over technology. And by the way, that dovetails to where we were just a minute ago in terms of we're bringing in technology to read these claim notes. We can't rely on technology to supersede the importance of the human element, because what we know is that, or one of the critical elements we know is that people are more important than technology. And so, um, back to the conferences, I don't yet know exactly where we're going to go. We've got some marketing people coming on board. We're trying to figure all that out. So we're being strategic with where and how we spend our time. Right now we've got, if you look at our pipeline, we've got some really exciting things going on. And so, we'll probably, 6 months from now, we'll have a much bigger marketing budget, bringing more people on board. So, we'll figure that out as we go.
No worries. I made a note to myself to cut the question out about conferences, so no worry about
Oh,
that.
cool. Okay.
All right. You're doing some very cool stuff. You've been doing it for 6.5 years. And you come from insurance. You are not one of the many insurtechs, not so much anymore, but the insurtech 1.0 was a lot of tech bros with a tech hammer looking for an insurance nail.
Right.
And that's how we ended up with Lemonade and a few others. And I'm a big fan of technology created. I don't want to say by us. When I say us, I mean the insurance community, because I'm not encouraging home built technology, right? Like
Right.
carriers acting as software companies, always a bad idea. Okay, no, but real insurance people who saw a problem
Right.
and
Amen.
then partnered with good technology
Right.
people to solve that problem, preferably without bringing in VC money, because the moment you bring in VC money, you have to grow exponentially. That's my favorite kind of insurtech. So I love what you guys are working on. If it works, I love the fact that you're a CPCU, by the way, fellow CPCU. If it works a third of the way as well as it looks like it works, this is fantastic, and I am so excited to have you on the podcast to help you get the word out. Um, I would look. Yeah, I look forward to see you guys continue to grow. Love to have you back in a year or two. Maybe next time we can have you and somebody from the client, whichever client you choose,
Yeah, that'd be awesome.
and kind of tell the story
Yeah.
of what you guys have achieved and yeah, that'd be awesome. I do have to go here in a couple minutes, but thank you so much for your time today. This has been a really interesting conversation. I love chatting with a fellow like true insurance nerd and learning more about the history of our industry. And I yeah, I very quickly like the light bulb went on and we're like, yes, this is how things should work.
Yeah. Yeah. Well, I appreciate that, and I appreciate the opportunity to be on your podcast. You are widely
My
viewed and
pleasure.
widely respected, and I appreciate that. I'm bummed that we didn't get any time to talk about Costa Rica. I know you had shared a little bit about that. It's a great country from where you originate.
Yes, yes. Thank you so much. Hold on.